is 12 o'clock at Florida time, so I recognize some of you might be on the West Coast, but we are ready to get started with our live class. My name's Cora Matzek. I'm the Business Development Manager with the sales team. I'm really excited to be presenting today over our frequently asked questions. So I came up with this idea because, on the front end, when we're speaking to clients over the phone, we get a lot of these commonly asked questions. And as an outsider looking in, you might have these commonly asked questions, and that might be the very thing that's stopping you from taking it to the next level and actually starting this new journey of self-direction. So really excited to be presenting today. Let's go ahead and get into this. Quick reminder though, after I'm done presenting, we will allot time to be able to ask any questions that you might have. So we'll get through the presentation and we'll go from there. So just to kind of get started here, I do want to make this disclaimer. I am not an attorney. I am not a CPA. I'm none of those things. So I'm just here letting you know about NewView and what you can and can't do with a self-directed account. So any of those specific questions that are in regards to your finances or anything particular to your unique situation, I would take those specific questions to the person who knows your unique situation the best, your CPA, your attorney, whoever that might look like. We'll go ahead and get started here with the very base of it. If you've never heard about self-directed IRAs and what you can do with them, so what is a self-directed IRA? An IRA in which the IRA owner directs all of the investment decisions. Self-direction is actually just a marketing term, not a type of IRA. So being able to self-direct your IRA is going to allow you to invest in alternative assets, private lend, but it still is what you commonly might know of what would be a 401k or IRA. Those are all the still same type of accounts. What are the benefits of self-direction? So diversification, tax savings, and investing in what you know best. So what we commonly see is, we hear about stocks and bonds, and those are good if you know what stocks and bonds and how the market's going to flow. But what if you don't know about stocks and bonds? I have very little knowledge about stocks and bonds, and I'm at the mercy of the market when my money is in those types of accounts. So allowing me to self-direct and invest in things that I know better, like real estate or a tangible asset that I could gauge a little bit more on what that profit would look like, that would be the benefit to me because it's a product or it's a topic that I'm actually more familiar with. How many ways can I save for retirement? This is another common question that we get. So the types of plans that we offer here are going to be your standard plans. So we have our personal plans, our traditional, our Roth, employer-based plans. So the solos, the SAPs, the simples. And then we also offer our specialty plans. So a lot of clients aren't familiar with that we offer these types of accounts. So these two accounts are really something that you could utilize alongside with growing your personal or employer-based plans. So an example would be our education savings account. So these are one of the ones that I wish I knew about sooner. My son is going to be 18 years old, a little late in the game for me to start with this one, but essentially it's for anything related to school expenses. So you often hear of people saving for college funds for their children. Well, what if you saved all of that money for years and years and years, and then your child ends up deciding that they don't want to go to college? What do you do with those funds? A lot of those types of accounts only direct you to investing in college. So this one's really good because you can utilize these for any school-related expense. If they're needing, supplies like computers, things like that, you'd be able to utilize these, and you can contribute $2,000 per child annually. So really, really good thing with that one. And then also your health savings account. So these are for people who have insurance plans with high deductibles. So you can have your health savings account. You can also utilize that alongside with growing your retirement plan. So that's a really good option too. So personal plan, so getting back to the basics here, we got a Roth and traditional. The traditional is your original one, created back in 1975. And then, so a little bit about each one. So your Roth one, $6,500 contribution annually, $7,500 for age 50 or older. This is after tax contribution. So you pay the tax before you implement it in there, and then that way it's already tax deferred. So qualified distributions completely tax free. So when you hear us saying you can invest in a tax free or tax deferred environment, the tax free option is right here. You've already paid the taxes when you've deposited that information or that money. So getting to our traditional here, the original one. So same contribution limits, right? You pay the tax later. So it's no income limits on participation and bankruptcy protection. And then you have your employer-based plans. So a simple tax deductible contributions, be aware of the 2-year rule with that. So another one that we like to talk about here is the solo. The solo plans allow you to have checkbook control. It gives you the largest contribution amount, so up to $66,000. So 25% of your income up to $66,000 annually. The account owner has more reporting responsibility, and you get exemption to UDFI tax. So we'll talk a little bit more about the solo. We get this question a lot when people do hear about the solos. Can you qualify for this solo? So there's 2 qualifying factors for you to be able to get to opening a solo, and we'll get into that here shortly. And then we have our SEP IRA. So 66,000 contribution limit, attained at age 21, and tax deductible contribution, 25% of compensation. Again, these are a little bit more in-depth information about the health savings account and the education savings account. Something that I'll reiterate here, a lot of clients aren't aware that we offer these specialty plans as well too. And when you look at these specialty plans, they're not often seen as a retirement strategy, but you can grow these accounts alongside with your retirement accounts and really, really maximize your potential for investing. What are the options for note investing from Barbara? Couple different note options that we commonly see. We have a promissory note, and a promissory note is a promise to pay back the lender. So some more examples are going to be secured and unsecured. So what is a secured note? So a secured note is backed by the value of the asset itself. If the borrower defaults, your IRA can acquire that asset. So an example, if you've privately lended funds from your IRA and you secure that asset, so an example would be you've given someone, you've lended them money, you've created your own terms, your own conditions, right? And one of the stipulations is if they don't pay, you then acquire that property. Let's say that it's a property. So now that they haven't paid, you can take that property. That property now is within your IRA. Your IRA now holds the value of that property. That is your property within the IRA. So that gives the lending party a safety net. So if you are ever going to private lend out of your IRA, which is another tool that you can utilize for your IRA. If you're going to private lend out of your IRA, one of the biggest things that you can do, one of the best things that you can do is secure it. Secure that note. Unsecured, so opposite of a secured note, right? It's not backed by the asset. There's a higher risk and in turn a higher return. So something to really think about. And I always reflect back on when I was getting into my first investment. What can we do to secure this property? What is the guarantee that the borrower is going to be able to pay my IRA back? Because remember, your IRA isn't meant to benefit you while it's an IRA. It's meant to benefit your future. So you want to maximize your IRA the best you can. That way, when it comes time for you to retire and you're ready to take those distributions, you have invested the maximum that you could have within your IRA. So getting a secured note is always recommended, something to really consider too. Roth conversion. What is a Roth conversion? We get this question a lot, and I'm really glad to be able to go ahead and clarify this. So Roth conversion. So moving money from a pre-tax account to a Roth IRA. Only pay initial tax for the conversion. So these are available to do in any of these plans. So SEP, simple, traditional IRAs, and 401ks. So you can do a Roth conversion in any of these specialty accounts. So some of the benefits and tips of having a Roth IRA: it grows tax-free to build retirement. Remember, when you've deposited those funds or you get those funds into that Roth account, you're initially paying the taxes on that amount that was deposited in. You never have to pay taxes again. Whether you end up growing that amount to hundreds and thousands of dollars, you've already paid the taxes on that. Initial tax secured tax-free distributions. Conversions may affect your tax bracket, so always consult a licensed CPA. Again, I strongly urge you to go back to any type of financial advice from the people who know your unique situations best. We are custodians. We do not recommend investments. We don't go over your financial advising. So those are going to be the people that you need to look for to get that specific direction. We hold your funds. That's why we're the custodian. You tell us where you want those funds directed. Make all conversions before tax deadline each calendar year. Do I qualify for a solo 401k? Nate. So earlier I mentioned, the solo is if you can get a solo, it's going to be the best of the best, but you have to meet two qualifying factors to be able to qualify for a solo. So these are the points of qualification. So the first one, you must be self-employed. And you must not have any common law employees. Must have self-employed earned income. So these are going to be the points of qualification. So if you meet these points, you would then qualify for a solo, and you'd be able to get that checkbook control. You'd be able to get the max contribution. So something to think about. If you hear these points of qualification and you fall into that category, I strongly urge you to look into opening a solo. So not to be confused with passive income. How do you invest in precious metals with your NewView IRA? Investing with NewView, so your IRA is technically the owner of these assets. Make sure you're completing your due diligence with these. So these would be the steps here. I always like to outline the steps because, again, self-direction in itself can seem overwhelming or seem intimidating, which is why I enjoy being able to do these live classes and provide some clarity in midst where it seems like it'd be overwhelming or it seems too intimidating to start. These are baseline starting points to get you on that journey of self-direction. So you're going to go ahead and set up your account. You set up your NewView account, whether that's your traditional or your Roth. You get your account set up. You use a purchase form and submit it to NewView. So some tips to make it go smoother is include all of the details. Include an invoice from the dealer. Now remember, keep in mind the metals are stored in an off-site facility. Do I need to have checkbook control? IRA, good question. Checkbook control is, so first off, kind of getting into it, what is checkbook control? It's having a separate LLC and bank account for your IRA. This can be a useful tool depending on your investment. So checkbook control gives you direct access to your funds. So you would set up the LLC, when you go ahead and set up that LLC, you would then be able to go and create a bank account with any bank of your choice, and then your funds would get deposited into that bank account under that LLC. You get your card, you have direct access. So it puts more responsibility in the IRA owner's hands, though. So remember, with that, make sure you're doing record keeping, things like that. Make sure you're working alongside your CPA when you're utilizing these types of tools. But sometimes we see who is the target audience for wanting to set up checkbook control. There's various different forms. Most of the time that I see people who want to implement checkbook control is, they have their LLCs that they're establishing for each one of their rental properties. Let's take that as an example, each one of their properties, and they need a separate LLC and they need direct access to their funds. Again, unique scenarios for each individual. Make sure you're consulting with the appropriate parties to be able to ensure that you are making the best moves. Yeah, so beneficial for active investors who may need more access. Can be helpful to pursue more exotic crypto coins. And it's a useful way to track investment progress without oversight. Keep in mind, do not mingle your personal funds with the checkbook control account. You cannot make a payment to yourself as the account owner. Actions like these are considered highly prohibited by the IRS. What is a prohibited transaction? Restrictions on IRA. So there's people restrictions, transaction restrictions, like we just mentioned, having checkbook control and then depositing your personal funds in with that, or paying yourself from those funds. That's a prohibited transaction. Investment restrictions. So life insurance and collectibles. Those are two that you cannot invest in. People restrictions. So an example would be you cannot purchase a property on the beach and then rent it out or you utilize that benefit for your residing that property. You're already getting a tax benefit investment. There's furthermore, again, your IRA isn't meant to benefit you while it's an IRA. It's meant to grow for retirement. And this is going to be more of an example of who you can't do business with within your IRA. So take a look at these. We won't go in depth at this. We'll go in high level with, anyone in your immediate family would be a rule of thumb that you cannot, do business with or direct those funds with. So these are going to be that list there. So transaction restrictions. You can't buy, sell, trade, loan, or extend services direct or indirect. Again, life insurance or collectibles. Again, your IRA is meant to benefit you while you are alive. You cannot purchase a life insurance policy with your IRA. How do I invest in cryptocurrency using my NewView IRA? Another good question here. We get this one a lot. So cryptocurrency, you can invest in crypto using the IRA X platform. You can trade Bitcoin and all of these different cryptocurrency platform here. If you see one that you're interested in, just be aware again, this is something that you could utilize. This would be getting started with it. So if you are interested in investing in crypto, this would be how you get started. So it's as easy as opening up a NewView Trust account. You would then get your account funded, whether that be contribution, rollover, or transfer. You then set up a trading profile, submit your purchase authorization for NewView to fund your account, and then you can start trading cryptocurrency on the trading platform. So something to keep in mind too, if you're noticing a theme, getting started and opening an account isn't as overwhelming or intimidating as one might feel or see. And what I'm hoping the takeaway is with this class is that you can recognize that getting started at a self-directed IRA journey really can be as easy as you want it to be. Other investment options. There is one other option for trading crypto within your IRA, investing with a checkbook control, giving you total responsibility. So again, another benefit with the checkbook control, various different scenarios, again, unique to your own situation. So the best person to advise you would be your CPA. Can I take money out of my IRA? Carter Beam. So your Roth and traditional are going to be after the age of 59 and a half, are completely, so Roth after 59 and a half distributions are completely tax-free. Gains taken out early will face a 10% tax penalty and tax. So traditional is pre-taxed. So after age 59 and a half, distributions are added to your income. Any money taken out early will face a 10% tax penalty and tax. So just remember, if you're taking out earlier than the 59 and a half age mark, you are facing a 10% tax penalty. And we're noticing that in a theme with a lot of these, except for when you get to the solo. So solo, again, it can be both pre and post-tax. Tax implication will depend on the kind of money used. Specialty plans, health and education savings, tax-free, tax deducted, various qualified health expenses are tax-free. Something to look into. Remember, New View Trust Company offers these specialty plans. If you weren't aware, these are available to set up as well within our company. So education saving plans, $2,000 per year per child, as I mentioned earlier. No tax deductions when contributing. Various qualified education expenses can be tax-free. When we're getting into high level here, again, when we're running specifics, make sure you look at your unique situation. What can I use my IRA to invest in? Short answer, anything that the IRS doesn't prohibit. And the IRS prohibits very, very few transactions. So you can invest in anything that the IRS does not prohibit. Private entities, real estate, private lending. Private lending is how I got my start. It was for an air conditioner unit. It was, it was a small taste of what I could do, and then I've just been able to expand from there. So really, really good options there to get you started. So these are a list of all of them. So limited partnerships, joint ventures, LLCs, trusts, syndications. We have a syndication division within our sales team. Real estate, rentals, Airbnb, foreclosures, tax liens, fix and flips, real estate options, condos, unimproved land, commercial property, and offshore real estate. And as we mentioned earlier, secured and unsecured notes. Again, the same restrictions apply. The people restrictions, the transaction restrictions, and investment restrictions that we discussed earlier. Can I live in a property that my IRA owns? This is one of those restrictions. So an IRA holder and family members can't use any of the properties, including both lineal ascendants and descendants. So reflect back to that chart that I showed you earlier. If any one of those members are listed there, those are the people, that would be a prohibited transaction. That'd be a people restriction. So silver lining, you can live in it once you're at least 59 and a half. You can take the IRA asset as a distribution to then own it. Is sweat equity allowed in IRA real estate purchases? Restrictions, you can't legally work on IRA owned assets. IRA specifically says hands off. Any personal sweat equity is prohibited. Certain family members are also disqualified. Both lineal ascendants and descendants extends to any companies or services involved. So while we do see that restriction there, what is not prohibited is using your own creative mind to get that property work done. You can search out for a contractor, negotiate the price, and have that contractor come out and repair what you might need, and you would pay them out within your IRA. So keep that in mind too. While you can't go and do that work, you can very well hire a contract at the price that you're comfortable with and contract them for those services. There's tips. So use the IRA restrictions to build your network. There's plenty of opportunity in real estate. Find something to avoid doing the work yourself. I always say, why would I want to do the work when I can figure out a way or strategize for someone else to do it for me? And your IRA truly allows you to do that. So here's what you would do next. If you want to know more information specifically to questions, I would encourage you to scan this QR code, visit our website, talk to an IRA specialist. So that would be any member of the sales team. Reach our sales department. We'll be more than happy to answer any additional questions or topics that we might have not been able to touch on yet with any of these live classes. And then make your first investment and start self-directing. If you want to stay up to date with NewView, these are all of we're on socials, our link to our website for more information on our classes, and also a link to our podcast as well. With that being said, do we have any questions from our audience?
We have a couple from online. The first one is, are there any limits to the amount of accounts I can have?
No, short answer, no. No limits. Like I said earlier, a lot of people don't realize that you can grow your other accounts, like the specialty accounts, alongside with your traditional, your Roth. A lot of people don't look at that as a retirement strategy, but it truly is. It truly is.
And the second one we have is, what is the difference between a transfer and a rollover, and does it matter which one you choose?
So a transfer is used to move funds from one institution to another without changing the account type. For example, if you're with a current custodian and you have a Roth with that current custodian, you want to come to NewView and you still want a Roth, we'd be transferring those funds, transfer to transfer, like for like. A direct rollover is used to move funds from an employee plan to another account type, like an IRA, without having to pay taxes. So something to always keep in mind, if you're coming, or a great rule of thumb, like for like would be a transfer. If you're adjusting the account to where it was an employer-based account and you're wanting to self-direct, think of that as a rollover. You're changing that account type. So any other ones?
That is all from online.
Perfect. Well, I hope I was able to answer all of your questions today. Again, please stay up to date with the most recent up-to-date contact on our socials. And also look for us on our next classes and podcasts at newviewtrust.com.